Good morning and welcome to the early bird. And here we're looking at the Dow Jones. I just want to have a look at two scenarios here. Okay, so the first one is that we know that we've got down for wave one, back for wave two, down for wave three, back for wave four, and down for wave five. So that can be the five wave structure complete there. And if that was the case, then we would be seeing an ABC correction back up through here, and that would be, in this case here, that would be five waves down for minor wave one, and would be looking back here for minor wave two here at this point here. And once that's in play, then would be looking for five waves down as such, like this. So that's one possibility. The other possibility is that we won't make it past the 11,500 here, that we will just push to this point through here, and then we will see five waves come down from this point here. So in both cases, we will see some sort of reaction here. Now, it's also, I need to point out that this can push through the 11,500, the medium level here, like it did here, but it's more of a question: will it find support on there or not? If it did push higher, then the next logical place for that to go to is the 11,650. Okay, that's like a little sort of sub level in there that's reasonably important. It's basically the halfway between the 500 and the 800. So that would be the sort of target there. Would also be looking at the 672 subgroup 2 area there as well. So it's okay for it to trade above there, but will it find support? Because if this 11,000 here develop support for a market, then we would naturally be bullish, and we would be trading long from that point. But it would have to come up there, and the market would have to somehow find itself sitting on there, like testing it as support there, and then would work a long trade off that. Going long just before in here or in here before that is really taking on a lot of risk. It's unnecessary risk because there will be some sort of correction, some sort of reaction here anyway. These are very high probabilities or possibilities, so we really need to sort of run with that. We're too sort of old and crusty to start, buying in on the hype just before here. So look, these are the two scenarios here. This particular one here, coming down through here, would be treating this pattern here exactly the same as the pattern that was in 2008 in the September, October, where we are now, position. So, and even then, looking at that pattern back in that 2008, September, October, this move coming up here came up to the very close to the 11,500 and then rolled over to the downside. So we really need to take that on board and allow this to play out here. There's a time to be in the market and a time to stand aside. And if you do like to trade, then you need to trade shorter time frames. And if you're a position holder, then use less money as well. But I'm just pointing out that there'll be risk here for long positions being in the market at this point here. These are the two scenarios that would be looking at five waves down for wave one, an A and a B and a C back for wave two. I think the 61.8 retracement levels around the 12,000 there for that. That would come in at sort of supply levels here. So we've got supply one, supply two coming in here. So if we did find support on here, then we'd be up at that stage there, and we'll be looking closer at the wave structure of that point there. So it does bring us back into this point here, like we've been before. In terms of this particular run up through here. Now, in this run up through here, if this was the A wave here, then we would be looking at a five wave structure to the upside there. And that's what we're seeing on all markets. We're seeing that five wave structure coming to the upside there, this one here. And it does appear that in most cases that we're in this last leg here, even halfway up this last leg, and in this leg coming up through here, and this will be explained when we look at the other markets would be looking at 5 waves in there, and in many cases, this structure here in this 1, 2, 3, 4, 5 here. In many cases, we're sort of in this 5. This will have 5 waves in it too. So we're sort of in there on this in a lot of cases. Now, each market is slightly different. And you know that we use the Australian dollar and copper to sort of govern our markets in terms of trying to find the right wave count here. But it does appear in the S&P 500 and also the Dow that we're in this 5-wave structure here. Now, what I've done is that in the Dow Jones, when I've explained the Dow Jones this morning, what I've done is I've considered that this particular top that we're coming into here is actually the top of the 3rd wave here, and a reaction at the 11,500 would be a 4th wave, and the 5th wave will take us to 11,650. Okay, so that's a real possibility as well. But in the S&P 500, what I've done is that I've looked at the situation in terms of that the wave 3 is already done, yeah, and we're coming into the S&P 500 at the 1200 mark here, and we're in this last little 5-wave structure here, and we're sort of halfway through that. In fact, we're sort of in this little sort of area here, okay? So one way or another, this structure that's pushed up here, and you'll see it on the intraday chart that that we're quite close to those tops there. So when we do look at the US markets here, we're counting 5 waves up through here, and that's what we're doing now. We're looking at this as in one way or another, in up for 1 and back for 2, up for 3 and back for 4 and up for 5 here. So we're kind of looking through there. We've got that trend line coming through here. So the price has been pegged there at 11,400 or very close to it. We'll have a look at that on the intraday in a moment. But there still can be that push up there further. So that's what we got to. We're not seeing any bearish intraday structures here. And I was also thinking as well, it might be a little bit wishy-washy, but you know, the financial system is actually based off quarters. You've got your quarters there on your futures contracts based on the seasons. So I do like to keep an idea on the moon cycle as well, because that's what the financial system is based off, and a lot of trading sort of fits in line with this as well. I know the 1929 crash and the 1987 crash had exactly the same moon cycles on the turn of the market. But what I wanted to point out here is that, you know, we all go a little bit sort of crazy into full moon. So we've seen this run up it's over the last week and this week here, based on, you know, the full moon sort of building up here. So it's the full moon tomorrow there. So from that point, that would leave us. That would be sort of Wednesday, Thursday, Friday, Saturday, Sunday, Monday, Tuesday. So we're sort of Monday, Tuesday, and Wednesday, sort of the flips, the dark side of the moon, so to speak. So it's just something we can bring into the equation, and it doesn't matter that much, but I've seen many times that it's quite a nice cycle thing to bring into the picture there. So looking for that moon cycle to top out within, you know, in this area up here, and also this trend up here that's moving up as well. Most trends, be it daily or weekly, would normally be in groups of 3 to 4 days on average, and then 7 to 9 days, and that's in weeks as well. Like we've had a nice run on the euro for 6 weeks to the downside. So it kind of works in that cycle. So that's what we'll be sort of looking to the upside here. So yeah, and looking at this on an intraday level, this is the US 30 as well. So this is one way of looking at this here. So we're looking for, that's that trend line coming through there. So you can see that it's really nailed it through there, and that's fine. But still, I want to sort of allow some space for this to play out up here, and this would be the structure. So we'd see a move to here, come back, then a push up through there, grabbing any stops, and then rolling over from there. Now, yes, it can roll over from here, and we'll be looking at that on the S&P 500, looking at the sort of last little 5-wave structure to the upside. I thought there'd be another little push there, but that's on coming close to the close anyway. But so that's still the possibility there. And when we look at the tech stocks as well, this is the tech stocks here. So we're basically seeing a larger correction here. So we know that that's a correction. There's no doubt about that. It's just the same as that the US market under 11,500. It's got those overlapping wave structures. You know, this high, this low comes in over this one, this one, this one, this one, and this one. So they're just basically corrective patterns. Now this move down here is in 3 waves. That's also a corrective pattern as well. So we'd be looking for the 5 waves to finish up through into this area up here, and that seems to be the case there as well here. Because I just needed to look at other markets, but it was a little bit tricky sort of nailing, is this the 3rd here, or is that the 3rd up there, and we got the 4th and then the 5th. That's been the problem with these markets, and it's the same. I've been looking at the German market as well. So this is a 1-hour chart for the DAX here, and basically we're looking at an A wave coming up and a bounce off the 5,000 here, 5-second strongest number, the B wave, and this is the C wave up here in 5 waves. And I could have this count wrong, but it'd only be out by like a small wave structure. So if we're coming, got up for 1 and back for 2, and then we've got all the way up here for the 3rd wave, and that would be the 5-wave structure in there, the 1, the 2, the 3, the 4, and we'll call that the 5 in there for the 3rd there. Then the 4th, which is a bit dodgy because it's such a small structure there, and because wave 1 and 2 are simple, I'd expect wave 3 and 4 to be complex. But that's that 5th and 3rd there could be over here as well. So I'll just take that with a pinch of salt, and this is one of the little sort of areas that could be wrong. But in this last structure here, would have up for 1, back for 2. The 3rd wave's finishing, still going on there because we've got 1, 2, 3, 4, be 5, and then we'll have the 4th and then the 5th. So there can be more to it there, and that would be the same as the FTSE as well when we're looking at the UK market as well. And what we've done here is we've called this up for 1 and back for 2, the 3, 4 that we're just talking about just then, and the 5th wave coming up there. So look, one way or another, we are close up here, and yes, the FTSE could go up to 5.5 here, but there's a beginning, a middle, and an end to a trend, and also a correction as well. And we can say that we're in the later stages of this situation here. Can this be a bigger move to the upside here? Well, when I look at the US markets and the European markets, not so much. But if I was looking at our local markets, BHP, then I do see a bigger picture to the upside in our local markets, and that's because we got that wave 1 down, that wave 2 back, the 3, the 4, and the 5 here. So that 5 waves that we're talking, over that last week there, that could be a much bigger push to the upside, where we have like 5 up, 3 back, 5 up, 3 back, 5 up, starting to get 5 waves up there. I'm not totally sold on that at the moment. So we'll just, like I said the other day, we're not that confident of one particular degree of wave structure, but what we can do is we can stay within the smaller degree here and work that there. So when we're looking at our local market here, we're looking at, this is a daily chart for the SPY or the ASX 200, whichever way you want to look at it. And what we were assuming first to be in line with the US markets and the other markets is something like this particular pattern through here. And that basically means that we're looking for a push up through here to around the 4,300 mark, or to the top here, the 4,350 there. And we're looking for that to be in 5 waves as a C wave up here. C wave has always got 5 waves. So we're looking for that structure up there. Now, that's going to run into problems because of that old high, the trend line through here, and also the 4-3 as well. I know that you may not be familiar with how Group 1 works. This is minor Group 1. But there will be some sort of corrective pattern through there. And like I said before, we've got a beginning, we've got the middle here, and then we've got the ending of the structure. So it's not a time to realize, it's not a time to start thinking that, that you've missed out on everything and it's, it's going to run off, like wild horses. That's never the case. You always get the opposite to what you naturally think in most cases. So beginning, middle and end correction. And we will look at this correction here and we'll see if this correction is actually impulsing to the downside, or is it a, B, and a C correction here? And if we get that A, B, and C here, then we can look to the upside. Now, that's what we would be looking for on the currencies, actually. The currencies, the Australian dollar anyway, that push that it's had up through here, would be treating that as an A wave and a B wave back and then a C wave up. So it's going to be interesting to see how this pans out here. But like I said, we're a little bit unsure of one particular wave structure, and it's a bit annoying, but we'll stay within our structure. So this 5 waves up through here that we're looking at here on our local market, this is kind of what it looks like here. There's probably different ways of counting it, but just trying to line it up with the rest of the market. So we've got the 1, the 2, the 3, the 4 here, and we're looking for the 5th wave up through here. Now, that said and done there, that in terms of trading, you'd need to basically work with what's happening at the 4-2 there. So if we look at that in a smaller time frame there, that's kind of what's occurring at the 4-2 there at a minor level there. But I did want to sort of point out that it should push up from here. That you can see that that's a very strong wave there, yep. So that's like a 3rd wave there, isn't it? So that would make that a 4th wave. And it's just coming back and checking into group 1 again, isn't it? So that's the minor level 2 there. That's the pivot of minor group 1, the 100, 200 and 300. And this is subgroup 1 here, the 10, 20 and 30 here. So it's just checking in support there, and it may even come lower into the 2 there, but you'd wait for it to check in and build a position off that, build a pattern off that here. But you can see that's the 3rd wave, so that must be wave 1 there. So that's wave 1, wave 2, wave 3, wave 4 here. If this wave 4 here overlap the top of this top of wave 1 here, then it will be breaking one of the 3 Elliott rules there. So wave 4 can't come back into the price territory of wave 1 there, which it does in leverage investments, leverage products like currencies. So we could have here in this structure here coming up, as we were looking in the last picture, we were looking for this being a top of a 3rd and a 4th here. So if we're looking for the last 5th wave to go to the upside here in this market here, we would be looking something like up for 1 here, back for 2. Then we'd have up for 1, back for 2. The 3rd wave here is still unfolding, so we'd see the 3rd wave to here, the 4th and the 5th to here, and that would be the top of the 3rd. And then we'd have the 4th and the 5th, which will take us pretty much up into this area here of our target zone up here. So that's what we'd be looking for here. So we can just map that out a little bit once again. Here we've got that wave 1 here, we've got wave 2 here, and we'll be looking for wave 3 up through here. So we'd be looking for the 1, the 2, and this would be 1, 2, 3, 4, 5 to here. And then we would have wave 4 coming back. Wave 4 would pull back 38.2% of the 3rd wave there. So if we were looking at the 3rd wave, we'll take it from there, and we'll take it up to the 80 there, just to be sort of fair about it. So it would come back to the 42.40 there, and then from that point there, we could look for it to push up further into this area here. Now, the length of this here would be about the same as the length of this wave structure here. But of course, when you get to large numbers here, the psychology of trading comes into play, and things get a bit sort of skewed up. So you take that with a pinch of salt. But that's basically sort of what we're looking for here, and that's kind of what you'd be looking for in the Australian dollar to be topping out too, which has reached parity at $1 last night. So we can look for that to do the same sort of thing here on the Australian dollar there. So that's pretty much that. So in that topping sort of, if we stay with that topping process there, then we can have a look at gold to start with. Now gold sort of pushed up through here, so I had to look at the correction being a bit larger. I'm still staying with the correction because of the overlapping wave structures through here, but basically we got an A and a B and a C for the A wave, the B wave to here, and the C wave in 5 waves. So the 1, the 2, the 3, the 4 and the 5 coming into this area here. Once that's into there, that should be complete there and then roll over from that point there. However, we're above the 1650, the medium level there, so we need to be long there. And yesterday I explained in the early bird how you would navigate through on the 1650 and how you would navigate through subgroup 2 there. Now, the interesting thing here, I think, is that yes, gold has made a new high above its highs here, this one, where silver hasn't done that. You can see how silver's stayed under its lows here, because we think that this 5-wave structure may be complete to this point there. It's still a bit dodgy. This can be the 4th, we can have a 5th up to here, but you can see that it's not pushing higher than its previous thing here. So it's showing that sort of struggle there. The oil market's just basically going to follow stock, and that's what it's doing. So look, it can push up higher through here, and once again we've got that 5-wave structure here that we've been yakking about. But I think one of the interesting things here is that just the reoccurring patterns, in a sense. We've got this pattern here coming back and retesting the 90 here, is very similar to this one here. So these are the sort of corrective patterns, and this one here, this is very much like the Dow Jones. We're just sort of going through that last sort of push there. So that's why I'm not letting it go, because I understand what's happening at the 11,500 is pretty much that, you know. So we'll stay with that. But these are all reoccurring patterns in their own way. This is the first time it hit 100. So it's really, you know, picking it up and vibrating across that number there, where here the supply is coming back up and testing the supply there, and the same with testing the supply here. So we're going to see pretty much the same sort of thing occur in here with stock as well. But in this case, we are simply looking for a 5-wave structure up into this area here. The key areas up here, of course, would be the 85, the 8650, and the 88. But it can come higher, just depend on what stock is doing. The other thing is copper. Looking at base metals, and we've said that down here before, that we can come all the way up to 350 here, 350. So that's pretty much what's unfolding there, and we'd look at this in terms of 5 waves moving up through there. I won't get into it, but it's pretty much the same as the stock situation, where we're looking for a top in this sort of area here. I can see this is still sort of unfolding in here, so there's more to come in here just yet, and that may even have a top there, come back into here, and then sort of push up as well. But in that later stages of a sort of corrective pattern, rallying through here, coming back and testing to see where the supply is there as a wave 4. So it suits. It all fits in quite nicely, really. With the indices pushing higher based off the Europeans getting together and German getting together and really sort of securing the situation making promises. As such, we're seeing a strong euro, and it means that we're going to get a larger correction in the US dollar index. And that's why we're seeing the Australian dollar push up to parity as well. But that push up into parity for the Australian dollar off the 94 low is much the same as this coming back down through here. So we pretty much see a little 3rd wave, a 4th and a 5th coming into here. But that's probably just the A wave here, like the Australian dollar coming back, going up into $1. It'll have an A and a B and a C here. So we need to look at this for the US dollar index, and we also need to look at this as the mirror image of the euro as well. So the euro's doing a mirror opposite image there. So we're looking at wave 3 up through here, and we're looking at reaction at 137. 137 is an old high over here, as is 138 and 139, but the 13772 and the 138 up here is what would be sort of looking at here. So as we can see here so far, we're looking at the 1, the 2 up for wave 3, which may not be finished yet, the wave 4, and then the wave 5 up through there, which would be the opposite to the euro and coming down through here as well, like the dollar here as such there. So the euro, as you can see here on the 2-minute chart here, at the reacting to the 137 through here. This is a nice time frame to use to trade the euro on if you're in there sort of scalping. I sort of like the 2-minute chart because it gives you a pretty good idea of the Elliott structure. It gives you a nice sort of clear view in counting the waves, and it also gives you a really good idea of support. So we can see that we got support here. Now, if we found support on the midpoint here, the 50, then that would be significant, wouldn't it, on here? You know, because it's come down, it's tested down through here, and it's building back up through here. So it would need to move up through there and come back and sit on it like it did here. So, and you can see that there is a corrective pattern, isn't it? And that would be patterns that would be familiar to the trend up from before as well. So just simply the fact that the market's moved up and it is corrective here, then it will move up further, because a corrective pattern, if you can recognize it, which is just overlapping wave structures, being corrective, is also a continuation pattern within a trend as well. So this pattern here would be the same as this pattern here. And that's what you'll find with markets. They essentially have half a dozen of their own unique patterns that make them the markets that they are. And yes, they can get skewed around certain numbers and so forth, but they'll just be different sizes and be skewed once you've sort of clicked into the half a dozen patterns or so. Now, the Australian dollar, just before we go there as well, the euro trade that we've had in terms of, we started up here on the daily robo and turned it into the weekly robo, and we're out here at 35.33 here. So that's the end of that nice trade that we had here. We do consider this, whatever happens through here, as a corrective pattern, so we will be looking to gain short as well, but we want to get a clearer pattern on what's happening with the US markets, and as the S&P 500 and the euro have quite a close relationship there, so give us time to work that out, and then we'll work back into that trade there. The Australian dollar here is doing pretty much what sort of normal is, but we're looking at this structure coming down here. We've been tracking these 5 waves down through here to get that sort of low into place. Now we're getting the A, the B, and the C wave back through here. Now it may not come back above the dollar there, but the important thing is that move up through there is the 5-wave structure that we've been tracking, and we'll be looking for a B wave to come back, and a B wave is in 3 waves, and then we'll see this C wave up there. Now this is the sort of preferred pattern that can occur at the 11,500 with the Dow Jones as well. So this is what we're sort of considering there. Yeah, so this is what we're sort of, it's got to bear that in mind, and what we're sort of working with. So this little structure moving up through here, if we have a closer look at that, would be this structure here on the 4-hour chart, basically the same as the other markets, the 1, the 2, the 3, the 4, and the 5. Now there'll be 5 waves in this structure here up from the 97 odd here, so figure out that there, but there will be a reaction through here. Okay, have a closer look into that. That's from the 97, the last low through here. So we'll be looking at a 5-wave structure coming up through here. I haven't really counted this yet, but we would consider this up for 1 and back for 2 of 1 degree, and then up for 1 and back for 2 of the next degree, and then up for 1 and back for 2 of the next degree. And this would be the 3rd wave in here, and that would be the sort of 4th and the 5th into here. So that and that would be a part of each other. That means that and that would be a part of each other. That means that if this is up for wave 1 and back for wave 2 here, that means that's up for wave 3 there, and that's back for wave 4, and there'll be another 5 waves pushing up through there. But it may not just push straight up from here. This particular pattern through here as well maybe would be complex. If this one was simple, wave 2 was simple, then this wave 4 here can be complex in terms of a triangle, double zigzag, all that kind of stuff. But you should expect at least three swings, like an A and a B and a C at minimum there, you know. But once you've got that there, you'll be looking for 5 waves up, which won't go very far. It'll only go about the same distance as that there, because the extension's in the 3rd wave. And once that's complete, then we can look at that coming to the downside. So you can look at an A and a B and a C, something happening in here, may even come lower through here, but some sort of reaction to this. Don't forget, number 1 is the strongest psychological number in the market. So, it's not going to be all sort of, not like going to your auntie's house, Okay, that's it. I just do want to recap on the Dow Jones just one more time here, just to get a bit sort of clear on. There's a couple of things that I didn't quite mention really, but I think we should go over those things there. Now, on a lot of the markets that we've been looking at, these old highs up here. In this case, this is a high here. Okay, in this case, that's a high, and this is lower here. But in some cases, it's this one here that's the high. Yeah, so this can be a failed 5th wave of the last trend in terms of it would pretty much sort of pan out like this. This would be a top here. This would be an A wave. This would be a B wave, and this would be a C wave as an ABC. Then the 1, the 2, the 3, the 4, and the 5 failing to go above here as a truncated 5th wave. Now, we've had this on the S&P for quite some time, so it's not new. And when you start looking at the other US markets and other global markets, you start to see that this is can also be the high here of the structure. So if that was the case, then wave 1 would be here, and wave 2 would be over here as a zigzag. So this would be basically as a sort of a flat pattern, I guess. So the wave 2 would pull back 61.8% of this structure here, and that would bring us in around the 12,000 there. Now, if that was the case, then it makes this here an A wave to here, a B wave to here, and a C wave up to here. And the C wave here would be 5 waves to this point there. That's what that would be. And that's why I was kind of bringing in the 650 here and so forth. But just to let you know that this can develop through here as a situation. But the sort of what I sort of prefer in lining it up with our currency market is I kind of like this pattern here better, where we've got this this situation here in terms of an A and a B and a C coming in here. Yeah, so that's sort of what we see there. But whichever way we go, this is a corrective pattern here, and whenever it finishes, we will see more downside here. That's how I see it, and I'm pretty firm about that. It's just a matter of bloody well navigating through this whole mess here. And we knew that it would be a mess when we first got our kickback through here, so we understood that. We had a lot of shorts on because we felt like there's half a silly chance that this can come down. Unfortunately, we've gotten this one back here, which is part of the 208 pattern, and it can still drop from that point there, so I'm not ruling that out. We're just putting things on the table that that we can look at. So we're just a little bit unsure about the situation, but at least we know that much, so there will come a time where we are clear about it, and then we can pile back in. But the problem with that situation as well, when we do know about the markets and which way that we're going, then they'll all go that way, so it doesn't matter. We'll pick a few out and we'll go with it. But like I said, we just stay within this short-term time frame here, and we are looking for a top here. We're looking for a top in this first section up here, not only in the US markets, but also the European markets and also our market as well. So yeah, just be aware of that. I know that you've been aware of that. Stocks will continue to push higher on our local market here, because just because this is going to perhaps stop at the 11,500 here, you'll see stocks will pick up their own momentum, and they'll just go, you know, as soon as people read that we're close to the old highs from such and such, and they start bringing out figures, that's enough to spur stock on. So indices can stay stagnant at certain levels, 4.2 or 4.3 on our local market, 11.5 here, and stocks can move up, you know, based on the indices being higher, just sort of running on the smell of an oily rag, so to speak. It doesn't last forever, but it gives you enough time to not get caught in the car headlights, so to speak. All right, well, that's that, really. Yeah, alrighty. Well, good morning and good luck. Thank you.